Good day, trader. My name is Wasco Smart FX. Welcome to our channel. In this video, we'll be talking about the weekend trade recap. Weekend trade recap is a moment where we talk about the trade we took during the week. And one of the reasons why we talk about the trade we took during the week is to be able to enlighten people so that so that they can know that the trade we took is not just about a chance trade or it just come like that, or maybe it's just a one-time thing. There's actually a strategy, there's an edge behind the trade, and it's something that can repeat itself. It's a trade that we took with knowledge and also a plan. And I always say one thing: plan the trade and trade the plan. It is not the other way around. Some people, most people do trade the plan and plan the trade. They took a trade, and when they are inside the trade, that is when they started looking at, oh, why is it trading? They started planning. No, you plan the trade and you trade the plan. So let's look at the trade we took on Tuesday. That's May 20. So this gold trade, we actually be looking at the gold trade we took. This particular trade here. So we want to look at why do we took the trade and what are the strategies that comes together. What is the edge for the trade? Looking at this whole diagram itself, like looking at the chart itself, everybody following my videos can actually discern or can actually tell why we took the trade. But I know I can only post it because that's why I post most of my trading. Like I post the chart so that people can learn from the chart, and because one of our goals in this community, the Wasco Smart FS community, is to be able to create people or build people that are able to read the chart effortlessly and be able to be profitable in their trading. And that's one of the ways we can actually attain this goal is by showing the chart out there instead of just telling people to buy or sell now. I can show them the chart, and when they see the chart, they can actually learn from the chart. But this video also help people to actually learn the chart also. Okay, let's go into the chart. Looking at May 20, uh, the strategy used there. People following my videos on YouTube can actually tell, and that is intermediate time low strategy was being used. But I want to tell you, you can't just open the chart and be looking at it. I've been looking for intermediate time low, even though on the trading in the zone, the video I made trading in the zone, I talks about where you need to look for the entry, where you need to look for this kind of patterns and everything inside the narrative. Yeah, so let's go into the chart and look at things. I'll start from 4 hours charts, looking at May 20. This is May 20. What happens? Why did I took that trade? The number one thing is, okay, this chart did not make a justice, but I will still talk about it because there is a gap here. There's a weak open gap. That's the NWOG. There's a weak open gap there, but this particular chart is not showing it. Okay, let me just put this. You didn't get to the favor. Okay. Let me just show you the chart I'm using to give a trade. Okay, this is the chart I'm using to give the trade. So you can see what I'm talking about here. This is the weak open gap I'm talking about. You can see it here. But this particular chart is not showing me, but that's not a problem. Let's go to 1 hour chart because that's the important place I saw the trades. So this is May. Okay, this is May 20 here. The first thing I saw was that, or the first thing I see was that, you see, market was trading the old bullish here. You can see the market break this structure. Market break this structure here, and market trace back into the discount zone using my Fibonacci. You can see the market to trace down to the discount zone here, entering the 0.62. That is the ultimate trade entry. But when market has not yet break this zone, on Monday market traded as if it was a kind of consolidating, and I know that when market consolidates, the next day or the next candle is going to go for liquidity first before expansion. There is always a liquidity before expansion. It is consolidation or something we call accumulation, manipulation, and expansion. Consolidation, manipulation, and expansion. Consolidation, manipulation, and you need to understand this market cycle. Consolidation, manipulation, and expansion. When market consolidates or when market consolidated, the next candle is going to go for manipulation or liquidity. They are going to go for liquidity in opposite direction of expansion. We know that the market is going to buy, but guess what Monday did? Monday consolidated. Monday did not buy immediately like the way Friday did. And the next day on Tuesday, I knew the market is going to come for this uh liquidity here. That is what they called manipulation. They wanted to buy, but when the Tuesday opened, a lot of people think, oh, let's continue the buy, let's put our stop loss here on Monday low. Guess what? Market took everybody's stop loss. Then now start his own buy on Tuesday. Now on this particular page, that is where the entry is. I cannot just be a buyer because I saw this and be a buyer like that. The stop loss will be so massive. So now we go to 15-minute chart to look for what? To look for our entry pattern. And the entry pattern, as I explained in the intermediate time, high and intermediate time low that I explained, is talking about when we have market. If market want to be bullish, market enter a fair value gap, then breaks. Then the moment market enter a fair value gap, then it was unable to break this low. Then market breaks it. So which means this enter a fair value gap, the market breaks. So this is it here. We have the left side of the market was bearish. The market entered a fair value gap was bearish. Then the moment market, it is called a reversing pattern. Whenever an intermediate time low is created, it is an outsiders of the market, and it's always called the reversing pattern. Market maker uses to reverse. It is a reverse engineer. It's part of the when we talk about the reversing engineers, it's part of the reversing engineer intermediate time lows. So the moment market break this high and create a new fair value gap, it validates this low as an intermediate time low. So that is this. Well, that is what we are looking out for. We are looking for a reversing pattern. Don't forget what we saw on 1 hour chart, because that is very important. You cannot just be looking for reversing pattern on the chart anyhow. You need to have an edge and understanding about where you want to see everything to play out and how you want to see it played out. We have the understanding that the higher time frame is bullish, and we have the understanding that market took a liquidity on 1 hour chart as a manipulation after a consolidation day. You understand? So now we are looking for reversing for bullish continuation. So on here we have, don't forget the chart I drew or the diagram I drew here. We have a fair value gap here where market enter into. You can see how market enter into it. So I was expecting, if market want to continue the bearish, market should come down to this low and breaks it and create a new fair value gap for bearish continuation. But market didn't do that. The moment market break this high and create a new fair value gap, that is the completion of the reversing pattern, which means that this low is called an intermediate time low. It is an outsiders of the market. It means market wants to reverse. Then here we can be a buyer, stop loss below here, below the short time low, or you can put it at the weak side. Then the take profit can be at this high or this high as long as you want, but don't forget I always talks about 1 to 2. So let me show you on the chart. This is the entry here. You can see the way I put the entry. You can see where you can see the intermediate time low. So you can see that it's not something that we are just trying to. So where this where market is going by and going by. Okay, let me show you the take profits. Okay, so this is the take profit here. You can see how market moves. Yeah, so that is the take profit. You can see how market moves. The intermediate time low is a reversing engineers, and don't forget higher time frame talks about everything, but you need to know the reversing patterns. Intermediate time. Don't forget to like, share, and subscribe. Don't forget to like, share, and subscribe. Thank you. I love you. Thank you.